Hello, everyone. Welcome to the show. Today, we're going to be talking about infinite banking and how you can use infinite banking to become your own bank. I have a guest speaker with me today. Her name is Tamara Whalen, and we're going to be discussing this and how you can become your own bank and use infinite banking to get out of debt within 9 to 10 years. My name is Christopher Vaughn. I'm with CVAF Insurance, and this is here at CVAF Insurance. We help people become financially free, help them get to retirement in half the time. So, if you could bring Tamara in, Carlos, we can get started.
Hello, how
Hello,
are you doing
Tamara.
tonight?
I'm good. So, I guess we can start going over like some frequently asked questions. The main one I get is like, what is infinite banking? What is debt free? What is that concept?
So, infinite banking, um, in a nutshell, is becoming your own bank. Instead of you develop a system using uh, participating whole life policies, and what that does is you put in extra money, and after a while, you are able to borrow from yourself and you are basically paying interest yourself and you're not paying it to the bank. So you're basically cutting out the middleman. That's kind of the
Right.
concept of it. Within that concept, um, what the really cool thing, how it works is, and this is completely unfathomable for people who don't know anything about it, is you take a loan from yourself. You technically don't have to pay it back, but your money's working twice for you. So you put the money into the program, and say you put in $1,000, you're in earning interest on that $1,000. You need a loan from yourself, you take out $500, you're still earning interest on that $1,000, even though you've taken out half of it. And so, and technically, you don't have to pay that $500 back, but obviously, you're going to want to continue to keep funding the program so that balance keeps going up. So, eventually, if you want to help kids pay for college, you can do it that way. If you want to go buy a car loan, you can do it that way, depending upon how much money you've put aside. Your refrigerator just died. Let's go, instead of taking out a loan at 29% interest, let's just go borrow from myself and get that, pay for that refrigerator. So, and then anything again that you take out of it, your money's working twice. You're still earning interest as if that money was still there, and that's pretty cool.
Right. Yeah, that is cool. So basically, I mean, you really are becoming your own bank. Like you're even when you take the money out, it's still
Correct.
compounding, correct? So you don't lose when you take the money out. But if you take money out of your bank, that money's gone, right? That's how that
Exactly.
works.
It's basically, there's a concept of it is, um, if you fill it, start pouring water into your sink and you got the drain open, how fast is that sink going to fill up? No matter how fast that
Right.
pressure is, it's going to continually drain. But with the infinite banking, it's like plugging that drain. And so then it just keeps filling up. And so you still have, you can still borrow from yourself, and you're cutting out the middleman. And so also using that concept goes into what we call debt free life. And we have programs that will get you, the average person can get out of debt in 9 years or less. The key to that is, if you're making any overpayments on your loans, instead of making the overpayments to the loans, you put that into your infinite bank, and then those loans, those overpayments start building up over time, and then you can use that to start paying off your debts. Again, you put it in, it's working for you twice, you're still earning interest as it's still there. And the more you put in, the more interest you're going to get. And so, it's a continuous cycle of cutting out the middleman And the thing that will help you with this is you're not paying those high interest loans once you get as you start cycling through this, and you're not going to be paying extra taxes because these are interest free and tax free loans. Let's put it that way.
Right, they're tax advantaged because there's really no taxes on a
Exactly.
loan, right? It's not considered income, so it's tax advantaged. So yeah, that's good information. So basically, it's um it's not a magical thing though. You do have to qualify for it medically, right? You have to qualify medically and financially. And the key is, Tamara, you mentioned about the overpayments. You have to pick a sustainable amount that you know you can sustain, and it takes a little discipline, but it can work for your family. I helped a gentleman that I know very well take his. He's in his 60s, and he had about 28 years left of debt and bills to pay, and we knocked that down. I think it's to like 12 years, and he'll be out of debt. And um, he even plans to overfund a bit more than what the program is that we created or designed for him. And his goal is to get out of debt in 10 years or less. So it's basically relieving you of all your mortgages, your credit cards, all your car notes, all the things that keep you working and going to work every day, stuck to the job. We can help you retire in half the time,
And
you know,
wasn't
and that's the
wasn't his
benefit of it.
savings uh wasn't he saving over 100,000 in interest?
He was. I think he's gonna save over like 100. I don't know. I don't remember the exact number, but it was over 100,000 in interest payments to the bank on his mortgage. It's basically he's putting that back in his pocket. So he's taking the money out of the bank and putting it back in his pocket. So it's a really good program. I'm excited about it. We're gonna be able to help a lot of people. Um, and like we said, we're gonna be taking the money out of the bank's hands and putting it back into the hands of the people every day. Um,
So yeah,
and
so how
it's
cool would it be? I mean, if all your debt was paid off, what would your retirement look like?
right. And how soon could you retire? Because people go to work for making payments, right? That's why we all work. We have mortgage. We have kids that are in college. We have car notes, and we need to eat food, and it's very expensive. It takes a village to raise a family.
Dodgers
So
tickets.
I have Dodgers, of course. Raider season tickets. It's expensive, right?
Shameless
So,
plug.
but we have to. Right, right. So, and we have a responsibility to payments. We become slaves to the debt. But with this infinite banking, you become your own bank and you kick debt out of your home. Because I like the video that you shared with me, Tamara, how debt is a bad roommate, right? It's a bad roommate that's kind of in your house eating up food and taking away depreciating all your money. That's what it's
So,
doing. So you got to kick debt
so
out,
basically, what we do is we do
right?
an analysis of your finances, and what we're looking for is what's called lazy money. Um, and lazy money would be overpayments on a credit card. Your minimum payment is say $50, and you're paying $100 to try to get that credit card paid down. So what we would do is take that extra 50. That's lazy money because all you're doing is paying interest, and we want to get rid of those interest payments. Your car payment, maybe it's $640 and you send 650. So that extra $10 is lazy money. And so that $10 we throw that into the program, and it doesn't really take a whole lot in overpayments. Um, that lazy money that you find, the little extra payments, that adds up real quick. And the way this program is, if things get really tight, maybe you can't make those overpayments for something came up and you don't really want to pull from the program, you can just make a minimum payment, so you're not stuck with it. That if you're saying scheduling a higher payment every month to go into it, it allows you to you know basically live life. So there is flexibility for you to do whatever it is you need to do. Maybe you want to put a little extra money into the program for, you want a family vacation. You can set aside that money in there to make that money work twice for you. So there's a lot of ways we can use this program, but the important thing is how much better would your life be if all your debts were paid off?
Right. Carlos has a question in the chat. It says, "Do I have to qualify to take a loan?"
No, because it's your program, it's your bank. It's you have to qualify to get into the system, to qualify for the policy, both medically and financially. Financially is not hard to qualify for, other than you got to be able to make the payments. Medically, you have to qualify. We do have, if you have bad health, we have workarounds on that. But as far as taking the loan, if the money's in there, all you have to do is call them up and you get the money. Now, it's not like your checking account that you can have it instantly. I mean, it's like a 5-day process, but you can have it instantly transferred into your account with instant, as in like 3 to 5 days. So no, there's no qualifications for the loans.
Good question. So basically, it's a financial system, personal financial system for you and your family. It's a strategy that you can use, and you hear it all over the internet. Oh, become your own bank, but nobody really explains it. They just talk about it and they make it seem like it's just a magical thing. But like Tamara said, the qualifying for it financially is not difficult. As long as you pick a sustainable payment that's realistic for your budget, and we help you free up the cash, like she says. We'll help you free up the lazy money, basically, that you're
So,
that you have laying around.
so we'll do,
And
yeah, we do a kind of an analysis of your funds, what you have coming in, what you have going out, what are your fixed bills, even if it's an approximation, some of those fixed bills that you're always going to have, would be your utilities, water, gas, electricity, that sort of thing. But we take those approximations of those fixed bills, and then we take into consideration all your other debts. And then at that point, we run it through. We have a proprietary program that we run it through, and it lets us know the best way to utilize your money and to basically utilize those lazy funds and redistribute into this program. So that way, once your debt is paid off, then we can look at allocating those same funds into possibly a retirement program. So then, again, how much better would your retirement be if all your debts were paid off?
right, it'd be real nice to not have to pay any bills and be able to relax every day with peace of mind for your family. And on top of that, you get a death benefit with it as well,
Absolutely.
because it's life insurance. So you, on top of being, no bills to pay, no debt, you do get a death benefit, because if something happens to you, because it still is life insurance. It's a whole life insurance policy. But we have another question. Is how fast can I access the cash value?
So on that is, if there's cash in it and you've made that overpayment, you can access it within, it takes like 5 days to process. So if your money you put in, say you put in $500 in on Monday, by that Friday, they want to make sure all the funds are cleared just through a clearinghouse, typical bank stuff. Funds typically clear bank 3 to 5 days, and they just want to make sure that those funds are cleared. But you can technically pull it back out in as soon as that's all cleared, and that's an average of about 5 days. So, assuming everything goes good, Friday or the following Monday.
Okay. And then there's another question. Do I have to put in a certain amount first?
No.
You just have to make your first premium, your
Right.
payment,
So what
right?
we do is we will allocate, part of because it is a life insurance plan, but we try to establish the life insurance portion a minimal amount. So we're maximizing your cash that you're putting in. And we determine what's a comfortable payment for you, through going through a financial analysis of your debt, your funds, and then we find out what you determines comfortable for you to put into this and how quick you want to get out of debt. So if you're quick, if you want to put in an extra $200 into it each month, then that's what we put into it, is that extra $200. And then that $200, you have access to it as soon as the funds clear. So if you made a big payment and then all of a sudden, oh my gosh, I got to get it back out, you can pull it right back out. And the beauty is you're still earning interest on that money as if it was still there.
Nice. So I guess I can go over some more questions that I get a lot. Wait, is there another question here? He says, "What's the catch with loans? Do I pay interest?"
Nope. No, the loans that you take out, technically you're just taking a loan from yourself, and so the interest is already compounding within the policy itself, and so there's no interest that you have to technically pay. It's within the policy itself. That's the beauty of this, is and you don't have to report that money as income because you're taking it as a loan.
So a lot of the other questions that I get when I'm meeting with people, one question is, do I keep earning while I have a loan out?
Yes.
And yes, the answer is yes. The cash value continues to grow and you continue to earn. I had somebody ask me one time, why not just get a HELOC on their property? And I explained to them that that's bank control, though. They're not controlling that. You still have to qualify credit, interest rates, and different things like that can hold a lot of people back nowadays. You have to qualify with your credit, your income, and when you use the infinite banking concept, you don't have to do any of that. And you qualify by selecting the payment you want to pay. And you just have to keep up with that payment and take a little discipline and continue. It's really a good program. I'm excited about it. We've been helping a lot of people, and it kind of shocks me that so many people don't really know about it. I mean, if I wasn't in this business, I wouldn't know about it either. But it's like a well-kept secret that wealthy people use. Insurance, whole life insurance, IULs. It's just something that they use, and we don't hear about it. Maybe because mainstream media doesn't want to talk about it, maybe, because banks, you get online and you see a lot of financial gurus. They talk about, certain type of insurances and why you shouldn't get it or if you should, whatever. But bottom line is, they're paid to manage your assets. So if you're in control and your money's sitting in a whole life policy or an IUL, there's no commission for them to make. So that's why you hear a lot of sometimes negative things regarding IULs and cash value policies, but it's really one of the best kept secrets that a family can use to, get themselves out of debt, break some cycles of, recurring debt and for generations. And it's not even very expensive. It's a lot cheaper than you would think to get coverage. I've helped so many people, and when you really write them a policy and help them, and they're shocked, like, wow. Like last weekend, I just did a guy, and he was getting a couple $100,000 of coverage for accident insurance, and he's not even paying $30 a month. It's like $29
Forgo
a month.
A couple cups of coffee and your favorite barista, and you got it. You mentioned famous people use this. That's how Walt Disney funded Disneyland, is with these with this infinite banking concept. The Rockefellers, they've done that. Those are two of the biggest names. There's several others out there, and for the life of me, my brain has just went poof. But
Warren
Buffett, yes, that's how they funded. That's how they became the millionaires that they are is using this infinite banking concept. And, we have made it to where you don't have to be rich to do it. We can put it within your budget. And eventually, as you put the money into this bucket, it's just going to keep overflowing. And the biggest thing with it is to start the system, break the cycle of being in debt, and you got to start somewhere. And life insurance, it's and Chris, you and I have been talking about it. The first thing that people say, after a loved one has passed, did they have life insurance? No.
Right.
And so how would it, the financial stress that is relieved by having these types of policies, and any type of policy that there is. Because life insurance, as we've talked about before, it's the one insurance you're guaranteed to use. We don't want you to use it
Correct.
soon, but it's the one insurance you're guaranteed to use.
Definitely guaranteed to use. Sometimes we have car insurance and never need it, never have an accident, never have any damage to your vehicle, but we pay it because we have to pay it to be on the road. Why not set aside a budget for your family, like the things that matter?
Home insurance.
Very, very important.
Home insurance.
Right, home insurance. We buy those or wherever, Best Buy, and we insure it so that in case something happens in the first couple of years, we can just go back in there and get another one. Right, our laptops, our cell phone. I have insurance on my cell phone, so that way, because these are expensive now. It's like $1,200. So if I drop it and the screen explodes, I just go pay $50 and get another one. So we have insurance on things that are important to us. Our families and our children's future should be important. And it kind of shocks me that the statistic of people who are not insured is very it's very shocking. It's like if you line up 10 families, 4 families might have insurance, the other 6 won't have it, or they won't have any kind of savings either for their future. Like they say, the average American family can't stand a $500 emergency to their house. It'll throw them off pace. So I just wanted to mention that, like, life insurance is very important. It's very important for your family.
It's very affordable too.
Yeah.
You would be surprised, how inexpensive life insurance is, and we can tailor it to fit your needs and your budget. One thing we go by is, legally we can't overinsure you. Morally, I'm not going to underinsure you.
Right.
I want to make sure that it's going to fit both your needs and your budget. And, then we're going to look at the concept of, let's get you out of debt in 9 years or less, including your mortgage.
Right.
Let's make that retirement comfortable.
Right. And then you can retire on your terms when you want to retire and debt free. Imagine that, though. I mean, really think about it. Retiring instead of working another, it's unfortunate to say, but some people work until the day they pass. Some people have to work all the way to the end. But imagine, instead of saying, oh, I can retire in 25 more years, you can retire in 9 or 10 years or 8 years. Imagine that. I mean, what would that do for you and your family, buying some time back, right? That's huge. I know that's huge for me. So we have another question, Tamara. It says, who is IBC best for? That's a good one.
Infinite banking, it's best for, our ideal initial candidate for it is anybody who is basically has that lazy money and we need to redirect. That's the best. But honestly, I think it's for anybody who is, that has any type of debt, any type of income, because you can use it in any, in multiple capacities. For the getting out of debt, for that concept, basically you should have at least 3 pieces of debt, and most people do. You have your mortgage, you have your car, you have a credit card. 3 pieces of debt doesn't seem much, and that's just the minimal that it should require. But to you just have to qualify, like say, financially and through your health. And we we have several different policies and several different types. We can get you qualified for your health.
Oh yeah, that we can do. Um, all right. So I got some notes here. Some of the questions that I get. Um, so it says one of the questions is, can I pause my premiums? Yeah.
Pausing your premium, there are provisions within the policy if something should happen. For example, if you should lose your job, that what would happen on that? You would just use those paid up additions that are within the policy to keep that policy active. We set it up that way, so you're still making those payments on the policy. It's just coming out of the funds that are already accumulated within the policy. You don't want to do that for very long, but life happens sometimes, and sometimes that's necessary. Or if you get sick, something should happen there. And there are other provisions in the policies for if you get sick. And they do have what we call a premium waiver on some of the things that we can add. It costs a little bit more per month, but if that's something you're concerned about, we can definitely take a look at that too.
Nice. Another common question that I get is, what if the market crashes? What happens if the market crashes?
What if?
Yeah, right. What if?
That's the beautiful thing about life insurance. The indices are based on the market, but they're not tied to the market. So, like with the index universal life policies, if the market just flat out crashes, you don't lose any money. You may not gain a whole lot of interest because it does fluctuate, but it hits a floor and it stops. With like your 401ks, they just keep going. Eventually you're gonna keep digging a hole. But with the IULs, if the market crashes, they're safe. Like even with in 2020, when COVID hit, the whole country shut down.
Right.
IULs made money.
I know, right? Yes, indeed.
So your money is safe in these types of programs. Like say, they're based on the market but not tied to it. And on the flip side, if the market's doing very well, you're going to have a higher percent of interest that you're going to start earning too, which is really cool.
Nice. So we have another question here in the chat. It says, can I do IBC on kids or for estate planning?
They would have to be 18 for this type of a policy at least. But there are kids policies that we can set up in, not so much the infinite banking. If they're younger, we have programs for using the index universal life policy that they can basically pay for their college, pay for their first home, and retire with a lot of money coming in. It just depends upon how we set it up. And then on top of it, they'll have a death benefit. They have guaranteed insurability for life. And it's setting kids up.
Cheaper,
but
right.
For infinite banking, for this particular process, they have to be at least 18.
All right. With the IULs, like you were mentioning, they can after age 65, they can have retirement income, correct?
Correct.
Yeah. And they even have whole life insurance for kids too that you can increase up to 4 times in their life, right? For like, yeah.
Yes, one of our policies, it starts out at a max of 50,000, and you can increase it up to 4 times with life events. So life events would be considered college, getting married, having a kid, buying a house. Not necessarily all in that order.
Right. So I guess another question that we get all the time is, what about the taxes, right? I know we've covered it a little bit, but the growth on the policy is tax deferred. The loans are not taxed. So
So the way
there
taxes are, you fund your policies with what's called after tax money. It means you've already paid taxes on the money. So kind of picture it as growing growing a crop. You're paying tax on the seed, but you're not paying tax on the harvest. So which would you rather do? Pay tax on this little tiny seed, or would you rather pay tax on the your crop of bushels and bushels of corn? So
right.
that's kind of how the taxes work. I mean, it's not tax free, obviously, but you're funding these policies with after tax money. So you're paying minimal in the beginning, and you don't have to pay on the end, assuming you fund it properly. Now we make sure that we keep these from a modified endowment contract, because if these policies turn into a modified endowment contract, you will have to pay taxes on that. But we set them up to where you don't have to. You won't fall into a MEC.
Nice. So I guess I wanted to start over for the new people who might be in the room. So again, what is infinite banking? Infinite banking is basically you becoming your own bank, right? It's a cash flow strategy and system for your family that you can use to get out of debt and retire faster, sometimes within 9 to 10 years. And it's an exciting program. We're helping a lot of people, and I'm really looking forward to helping people and getting this message out to as many as possible, because I mean it's a powerful thing that can help so many families. And I'm just, like I said, I'm just kind of blown back by how many people don't know about it. And it kind of makes me sad that if I wasn't in this business, I probably wouldn't know about it either. But it is a good way to help yourself, your family, and it still has the death benefit that helps keep your in case something happens to you while you're on your journey to becoming debt free, there is a death benefit there through the insurance, and you can set it up to help you, get the house paid off or get some bills covered, whatever you need to do. It could be custom tailored for whatever your family's needs are. And it's really powerful. It's a truly powerful tool that I'm excited about. I'm looking forward to helping a lot of families. And we've already started. I've started with some personal friends of mine, helping them cut their debt in half. It's a good feeling to be able to help someone. Um, I just can't explain. I can't explain that, how that makes me feel, but it's a good feeling to be able to actually help someone to get rid of their debt and still, you know, protect their family on their journey. And I don't know about you, Tamara, but that's kind of how it is, right?
Protecting families is the name of the game. There's several situations. I mean, we've talked about, losing a loved one, and being able to, as an agent, being able to hand a death benefit check to the beneficiary instead of saying, sorry, you should have talked to me earlier, sucks for you. You didn't get any coverage. I mean, obviously we wouldn't say it like that, but being able to give them the coverage so they have the peace of mind, makes a difference, and something is always better than nothing. Yes, we want those $1 million policies, but sometimes we can't afford that. So, but even having a $15,000 policy for your loved ones makes a difference.
Right.
And with these infinite banking concepts, the way the death benefit works is we have a set death benefit. It basically, it's a higher death benefit to keep it from turning into that modified endowment contract. So, your debts are going to get paid off too. So we take that into consideration, your mortgage, your cars, the rest of your debt, and we try to make sure that your debts are paid off in case something happens before this program has completed. So say you have a program, your program is designed to get you out of debt in 7 years, 9 months, and God forbid the inevitable happens in year 2. Well, your family's still going to be taken care of, because
Right.
that's all taken in consideration when we design these programs. So it's a win-win situation. Get out of debt, enjoy life, enjoy your retirement.
And like we mentioned in the beginning, it's going to take a lot of discipline. It's it's not a magical tool like, oh, I'm my own bank and now all my debt's paid. They use two methods, right? Or the popular methods is the snowball effect, and then there's the avalanche, right?
Correct. There, yeah. So basically, what we do is we analyze all your debts, and determine which is the best way to pay them off. The debt snowball, basically, what that does is it takes all your lowest debt in consideration and pays those off quickest. So if you have, a credit card of say $500, you have another one of $1,500, and then you have your car payment or your car loan at say 15,000. It's going to pay off that $500 credit card first, and then that $1,500 credit card, and then it's going to pay off your car. And then of course then the funds are going to get redistributed towards paying off that mortgage early. Then the other one we have is called the debt avalanche. What that does is it takes into consideration your highest interest. Might not be the lowest debt, but it takes it off the highest interest. So it looks at, may have a loan for 3%, one for 10%, and you may have a few out there for 29%, which seems like the average these days. So it's going to pay off those 29% interest rates first, and then it's going to whittle it down and pay off those lower interest rates last. And it analyzes which way is the best way to do it and redistribute those funds to the right bucket, so your funds are being utilized and your debts are getting paid off quicker.
Okay, thank you for that, Tamara. So I guess there's another question that I get a lot, and it was can I have multiple policies? Can you have more than one policy?
Absolutely. The more the merrier.
Right. I have multiple policies.
Yeah. You have different policies for different reasons. Some people earmark policies for their mortgage. So if something happens, that mortgage is paid off. Some people just have an additional policy of accidental, which is a low payment policy that will pay in the event that you perish in an accident. And it doesn't have to be a car accident. You might fall off a ladder and that might be the end of you. It doesn't matter what type of accident it is, but over 51% of people perish in non-intentional activities.
Right.
So,
and with the accident insurance, you don't have to qualify medically. There's no medical question.
It's instant issue, instant coverage. The other, then you might have a policy set up to help your retirement, because like with an IUL, you can set up the Index Universal Life policy for retirement. You're putting the money in there. Again, it's safer than a 401k. Think of a savings account on steroids. And what that's doing is you're getting that extra interest put on it. And if the market crashes, you still don't lose money. Whereas a 401k, depending upon your allocations and how you have it set up, you can lose a lot of money. And once you've lost it, you can gain it back, but you still lost it. It's still gone. So you're starting from ground zero again and moving up. Some people have just final expense policies. They want to make sure that, their burials or cremations, their funerals are taken care of. So they'll have, a policy just earmarked for that. Setting up kids the um, for college, that's a big one. College expenses keep growing every year. So if you have a policy earmarked for that, you can set up for that. So there's different different types of policies for different needs, and you know we have several different carriers we work with, and we can get coverage for anybody from age 0 to age 89, just depending upon their age, their health, what they want the coverage to do for them, and their budget.
Nice. So we have another question. It says, can a business own and use the infinite banking concept?
So there's different ways to set it up for the business. Um, it would kind of depend upon if it's a single proprietary business. Um, we would have to look at it. I don't have the hard, fast answer on that. Um, it all just depends upon how the business is set up. I would imagine, if you had a really big, like one of these big box stores, there's way to allocate your funds into those infinite banking concepts. Think Walt Disney, Warren Buffett, they did it. We typically aren't working with the bigger businesses, but we can. We have, just because we personally don't know how to do it, we have experts, subject matter experts in our field that we can help pass that information on to. And while I know about this, how to help an individual, they'll know how to help a business.
Nice. Yes, we do have a full team, and I think between all of us, we're probably licensed in almost every state, right? Or
Oh
close
yeah,
to it. Yeah. Yep.
every state we can help with.
Mm-hmm. All right. So I guess another question is, do I need a massive death benefit when I'm doing the infinite banking concept, when I'm setting up my policy for infinite banking? I get that question a lot too.
No, you don't have to have a huge death benefit for that. Matter of fact, we try to keep the death benefit as low as we can while still covering the family. So that way, we're keeping the cost of insurance down. So we're maximizing your dollars that are getting put into the program to maximize that cash value. But we look at your debts and see if, what you need that death benefit for. If you've got an expensive mortgage, we want that mortgage taken care of. And we're going to make sure that that house is taken care of if something happens before you're debt free. But we'll evaluate your whole program, your whole financial scenario. There's no one size fits all program. Everything is tailored to you specifically. And based on that, then we come up with the financial and needs analysis of what we can do for you. The consult to get a consult on this to see what you may qualify for and how quick you can get out of debt there's no obligation. If you don't like it, you don't have to sign up for it. We have subject matter experts that we will go through and analyze your whole program. If it sounds good, we'll sign you up for it. If it doesn't work for you, at least you know what you could have qualified for. And, we part as friends. But it's no cost obligation to see what you can do to get out of debt free.
Right. Consultation is free. If you want to book, it's at the bottom of the screen there. Just click on the link and book your consultation. And it is free and it is no obligation. We'll help you out, tailor a wonderful plan for you and your family, and it's free. I mean, it's a win-win. Just no pressure, no obligation. Outside of the infinite banking, I want to stress the importance of locking in life insurance and getting something permanent while you're young. I've helped a lot of clients, and I've showed them, somebody that's in their 60s versus somebody that's in their 30s. Sometimes you'll pay 3, 4, 5 times more or more. I had a client that wanted $1 million policy. He was in his early 60s, and the price of that was about $900 a month. He couldn't afford it. But I showed him, I said, look what would happen if you were 32 and not 62. And the price was like less than $100. It was crazy. It was term insurance, but it was less than $100 just to get started to cover the immediate benefits. Like, if something happens to you while you're young, your house, your car, your kids and your wife are set and they're not scrambling, you know, and it made a big difference. It shocked him, like, wow, I should have did this earlier, you know. And
But
you can have multiple policies. I have more than one. I have about 3 policies for myself. I have an IUL. I have some insurance, some term insurance for the immediate um, issue, and it is convertible. And I have accident insurance, and I have riders inside my other insurance policy for accidents. So my family's well protected. If something happens to me, whether it's an accident or I happen to perish, I pass, they're covered. And that gives me peace of mind too. I don't have to stress out and be like thinking, well, what's going to happen? You know, what'll happen if something happens to me? Because if something happens to me, they're going to lose substantial amount of income coming in, and their life will be different without me. And that is undoubtedly true. Their life will be completely different if I wasn't here. So I just want to stress that importance of doing it while you're young. It's not for old people. It's actually for younger people. My kids are all locked in, age 19, 25, and age 30. They're all locked in because it's permanent. They all have IULs. It's permanent. It's gonna accumulate cash value, and it's a permanent policy. They don't have to worry about waiting till they're in their 50s and 60s. Like, oh, I need some insurance, and then what they're paying. None of them are paying $100 a month. It's like it ranges from $40 to, I think my son he got an IUL, which I think it has like 400 and something thousand, and his is still only 80 something bucks a month because he did it when he was like 23, 24. So it's cheap, and it carries on forever. It's permanent insurance. You can't lose. I mean, $30 a month, $40 a month, but you have the peace of mind that if something happens to you, your family's covered.
but if you've waited, because we're all young and dumb once, and as we get
Right.
older, we decide that we need something. We can still get you that coverage, and we will get it to you as affordable as we can.
Yep.
There's ways that we can do what we call stacking policies. If you need $1 million worth of coverage, there's a way we can get you $1 million worth of coverage that's not going to cost you a house payment.
Right.
There's ways to do it. And again, we will analyze, what's important to you, and we will base it on your health, your needs, your budget, and we will find something that works for you.
Right.
We have multiple carriers that we work with. Some carriers like some ailments, some other carriers like other ailments. If you've had heart conditions, we can get you coverage. If you have diabetes, we can get you coverage. If you have,
Definitely do that.
major catastrophic illnesses, we can still get you coverage. You know,
We
we
even
will,
have guarantee issue policies, right?
yes. And so, you know, some we have several different types of coverage, and like I say, legally, I can't overinsure you, but morally, I won't underinsure you either.
Right. Nice. Yep. So I guess we can do a quick recap, I guess, before we wrap up and finish up. So basically, let's say again, what is the infinite banking concept? It is basically you and your family becoming your own financial institution. It's powerful. It's a powerful tool. It's a financial tool, personal financial tool for you and your family, and it is geared to get you to eliminate all your debt, become debt free, and get you to retire in a third of the time. You can knock off having 30 years worth of debt and 30 years worth of working and waiting to retire, and you can get that done within 9 to 10 years. It's very powerful. And I've said it 2 times already. I'm very excited about it. I'm looking forward to helping as many people as I can. I kind of got into this business so I can help people, and that's what I like to do. I like to help people, and that's it. We can help you, and we can make sure that you're taking care of your family and that you're prepared for your future financially for your family, because life insurance is not for you; it's for your family. I don't know if you've seen any of my videos. I always end them with, "It's not for you. It's not for you. It's for them," because it's not for you. It's a selfless thing that you're gonna do. It's an unselfish act. It's for your family. It's for your wife, your spouse, your children, your grandkids. To allow them to have a better financial future when you're gone. Because, like I said, I have 3 policies on myself and 3 on my wife, because I have children, and I want to make sure that they're set, and it's not as expensive as you would think. And I'm older, and you notice how I said I'm older, Tamara? I didn't give a range. I just said I'm older. We'll leave it at that. I'm older. I'm past 50, and I'm diabetic, and my insurance is. I qualify. I even qualify for the instant issue IUL. Right, Tamara?
That's
It
right.
was an instant application. You just have to be honest on your application and let them know whatever medications that you take. You can't, you have, because it comes up. They with your social, they do it's the MIB report, right? Medical
Yeah.
records and stuff. Yeah, so it's gonna
It's
come up.
medical information bureau. Think about it
Right.
as the credit bureau for your health. They have
Right.
everything.
They got it. Yep. Yep. So I mean, it can be done. I can do it, and my wife's in pretty good health, so hers were easy. But I had to qualify for mine, but it was simple. We just had to do the app and be as honest as possible and put all your medications and all your issues, and then it comes back and you're able to get coverage, and it's much more affordable than you would think, and it's worth it. It's worth it to like Tamara says, find the lazy money, find that lazy money, and redirect it to help your family, because we all have it. I had a lot of things. I was paying like $200 a month for like some AT&T streaming, and I didn't even watch the cable. It's like a little box I had in my house, and I never used it. And I thought, man, I'm getting rid of that. I don't use it. So I'm not here telling you how to spend your money, but for me, there was a few things that I was able to do to clear up a lot of money, and then that money can be redirected and used for your financial future. Because I don't want to work all the way up until the day I pass away. I don't.
No, I don't
Yeah,
either.
yeah,
So
I don't.
if you think your retirement will be more comfortable with your debts paid off, get a hold of Chris and we'll schedule a consult and see what we can do to help.
Right, and we'll get you headed on your debt free journey. Right? Is that what we want to call it, Tamara? Their debt free journey, or how's that?
Life to a comfortable retirement, living debt free.
There you go, debt free. Imagine that though. Like, really think about that. Imagine waking up and you got nothing to pay for, except, well, you got food and basic living expenses, utilities, things like that. But imagine not having a mortgage and car notes and credit card debt and all these things that are just piled up on you. Old student loans from 20 years ago. I know somebody that's in their 40s and they're still paying student loans, believe it or not. And they've been out of
I
college
don't
for
believe
almost
it.
20 years,
Got
right?
mine paid for.
Yep.
Finally.
So, yep. All righty. So I guess we're gonna wrap it up. That was some good information. I enjoyed this. Thank you, Tamara, for being my rock here today
Not
and
a
helping
problem.
push this conversation. And if anyone is interested in becoming debt free and retiring in half the time, click the link. It's in the bottom of the screen. It's just the original call is only 10 minutes. We'll get you going, and then we'll schedule you another consultation. That one's only about a half hour or so, right, Tamara? It's not a lot.
If that, it all just
Yeah.
depends upon the program. Again, it's tailored to you.
Right.
But just make sure if you like our content, make sure you join us next time. Subscribe to the channel.
Right. So like, subscribe, and book your consultation. Do it now while the information is fresh on your brain. So that way you don't, once we leave, you're going to scroll on and that's it. Right?
Yep. Sounds good.
All righty. Well, thanks everyone for joining, and we'll notify you when we schedule the next live. Our next topic, we're probably just going to go through some examples. I want to are we able to do that, Tamara? Can I just like share my screen and show them like different examples of what things cost at different ages and stuff so they can actually see it?
It's easier if they would just schedule a consult because it's individually tailored.
That's true.
It's tailored to the needs. So yeah, like and subscribe, and we'll catch you next time.
Yep. All right.